Good morning, good afternoon, good evening. This is Sid from Elliott Wave Plus, and this is the April 14 of 2021 edition of my quarterly premium plan webinar, where I go over all of or as many aspects as I can cover in 1 hour. Of the premium plan here at Elliott Wave Plus. The premium plan is our flagship service. It's $200 a month, and it includes everything that we do here at Elliott Wave Plus. It has all of my Elliott Wave counts and associated Fibonacci price targets on many of the items, stock markets around the globe, currencies, commodities, bonds, screenshots of all my wave counts and all that sort of thing. Also includes a weekly counts webinar where I basically explain all of those wave counts. But what the premium plan brings to the table is additional level of service that is essentially automated signals, automated trade signals. And these automated trade signals are based on momentum algorithms that I've written in the Trade Navigator. And so before we get started, I want to bring over my disclaimer. It is at my website, elliottwaveplus.com. You go there and scroll to the bottom of any page, and you find this Terms of Service disclaimer tab here. It's there all the time. Please go there and read that in full. If I were to summarize it in one sentence, it would be, there's risk of loss in all trading. One special note that I would like to make additionally while we're talking about automated trade signals is that past performance is not indicative of future results. And there's other language in here that is required by law that I put in there. Because when you're automatic trading based on automated signals, based on indicators, it essentially is using computer-based situations that arise in the movements of the markets to produce buy and sell signals, and based on back testing over a period of time. How would these signals have done over a period of, for instance, the last 3 years, et cetera, et cetera. So I can tell you we've been doing this service now for about 3 years, and I do re-optimize, re-backtest all of the settings on all of the 20 items that we cover, approximately 20 items every quarter. And so we have this constant running 3-year back test where the settings on when to take the trades, how large the stop is, whether to trail the stop or not, when to take profit, all of those things are automatically generated by Trade Navigator, the platform, and are based on what would have done well had those settings been in place over the last 3 years. So just wanted to make sure that everyone understands what the deal is with automated trading. So I'm going to bring up Trade Navigator, and I'll turn off the video of some. There we go. Hopefully you're just getting full screen on the Trade Navigator and just my voice now. And this is an example of an algo that I wrote to automatically trade the Dow Jones Industrial Average, specifically the YM futures contract. All of the signals associated with the premium plan are built on daily signals, or daily candles, daily charts, and indicators that are on a daily chart. And some of them are based on futures contracts, and others are using, for instance, on the On the S&P, we cover and send out nightly signals on the ES futures contract, but also on SSO, a 2 times bullish ETF, or SDS, a 2 times bearish ETF. And so tonight is a really good night to show these current situations with these algos, because we got quite a few signals that came through overnight. But a lot of the night, I'm going to look at use the Dow Jones Industrial Average contract as my example contract on how I designed the algo, how it's performed over the last 3 years, et cetera, et cetera. One other thing I want to show you at my site before we get into that, the nitty gritty on that, is if you are a subscriber to the premium plan, there's several of these headings up here that would become active for you at my site. One is screenshots, and every Sunday and Wednesday, I put up screenshots of my Elliott Wave counts and associated Fibonacci price targets on lots of items. There's typically, on Sundays, there's generally about 130 screenshots. On Wednesdays, there's about 60. And the difference is, on Sundays, I put in some of the longer term charts, the monthly charts, the weekly charts, that sort of thing. But on Wednesdays, I just give the daily and 240-minute update if there is a 240-minute available. So that's all a part of the screen under the screenshots tab. And then under webinars is where you'll find availability of, if you're a pro plan or premium plan member, of recordings of the Sunday webinar, where I go over all the Elliott Wave counts associated with Fibonacci price targets. And there's also a recording there that allows you to jump specifically to my coverage of specific items. So if you are, for instance, interested mainly in mining stocks, you click on mining, boom, it takes you right to uranium, the gold miners, and some other items there. So that is all part of, well, let me escape out of that full screen. Those are the way you get to see the webinar recordings. But as a premium plan member, you also have some stuff under the nightly reports tab. And 2 things. One is the daily trend reports. Daily trend reports basically let you know what the trend is currently on daily charts, on number of items. So here's the Dow Jones Industrial Average daily trend chart. And as long as the price action's in a green box, I think you can figure that the trend is still up. If you are in a red box, then the trend is down. So, and as you can see, this one was posted tonight. And trend is a much slower reacting thing, being aware of what the trend is. The trend on the stock market definitely has been up. The last change from a downtrend to an uptrend was all the way back on March 8th on the Dow Jones Industrial Average. There was a little bit of a move to the downside there, but it wasn't enough to give a pink box or a red triangle. And so it changed right back to a green triangle. So the trend has been up since March 8 on Dow Jones Industrial Average. And you get trend screenshots on all kinds of, about 24 different items, as I recall, maybe not quite that many, about 20. So many of the same items that are involved with the nightly reports let you know what the trend is. And then just closed out my window. Hang on just a second. Got to get back to my website. And then the other thing that you have access to, and the thing that really separates the premium plan from the other plans, is the nightly reports the premium plan nightly algo reports. So here's tonight's report. And if you were a paying subscriber, you'd be able to get in just that easy. Scroll down. You can download the entire edition here as a zip, and then keep it on your hard drive and examine all the screenshots on your hard drive, or you can quickly view them right here. Let's go back to the Dow Jones Industrial Average, and we'll see the same thing that I'm showing you live on my Trade Navigator platform, that we'd been on a buy signal on the algo since March 29, and we just got an exit signal today at the close. Got an exit signal at the close today, and you'll you can scroll through, and oh, by the way, every night you also get a sentiment conditions screenshot on as many items that sentiment data is available. You'll notice on the Dow Jones Industrial Average, we have commercials as a percent of open interest that all of a sudden are looking to the downside. That's a very quick acting sentiment indicator. And the commercials also have been, I would say, getting out of their long positions. I don't know, they really haven't gotten into a fully short position yet, but it looks like some profit taking has been going on lately. So whenever this indicator is green, that means that the commercials are as long as they have been at any point during the last 6 months. So they're bullish, and that was we had agreement that things were bullish because the commercials as a percent of open interest at that time were heavily bullish, and that's why we had a thin box that represents this indicator and a thick green box, and that represents this indicator, stating that the commercials are bullish right here, and price has continued to go up, but now we're starting to see a little bit of bearishness come in, and so you get sentiment screenshots on every item as well, and then you can exit out and you can look down for other things that you might be interested in, like silver. You know, the silver right now looks like the last signal we got was a short signal a couple days ago, but it did not fill, and I'll show you why that is in just a minute. So basically on silver, it's recommending staying flat at this time. So I'm going to put all of that away, and I'm going to start talking about live charts here on the Dow Jones Industrial Average. As I mentioned before, we had a buy signal March 29, and that meant get long at the open of the following candle. And then tonight, we got an exit signal which says take profit now at the open of the following candle after the April 14 candle. So that candle started at about 5 o'clock Central. That's a couple of hours ago now. These big green boxes represent winning trades. And what that means is, had the settings that are currently being used on this particular item been in place over the last whatever, but you know, I can show you a back test going back 3 years, that there would have been a winning trade here, winning trade here, winning trade here, a big winner here, and that was a long trade. The last nice winner there that occurred on a short trade was right here. That was a short, and it was a big winner too. So how big are these winners? Well, this one was $13,000, and this one $4,200. And this is trading one YM contract at a time. This one was 3,000, and this the most recent one, approximately 3,100. So as you can see, you can tell by the naked eye, the winners, you can actually see the winning trades. The losers are shown in red and sometimes the losers happen fast enough you can't hardly see them much. But there was a loser right there, and there was a winner. There was a loser. There was a winner. There was a loser. There was one that was stopped out later in the day after it entered the trade. This is a nice size winner. This looks like a loser here, got stopped out. A winner, winner. So when we go back and look at some of these trades and see how it looks on a chart. These are all the different parameters of the different indicators that I'm using on the chart and that I backtest. And as you can see, there's quite a few of them. And this is my backtest goes back exactly 3 years. So every quarter, I update it to where the start point of the backtest is exactly 3 years ago, and I do the backtest and the optimization of all the settings that way. So when I run this, I'm going to run it, and it came up in a different monitor. I'm bring it over. So here's the results of how this algo traded over the last 3 years. Had the settings been in place over the last 3 years, these are the results. And I can tell you, I've been doing this long enough to know that the way I designed this algo is really easy to understand. And that is that you're not always going to have strong momentum. You're not always going to have strong momentum. You're like this period right here from about mid-November until early February was a particularly difficult period for auto trading. And so all those little losers, and the reason is because price was edging its way up, but it was dipping pretty often. And so it was really stopping out any attempt to grab a hold of some upside momentum there, even though it was moving up. Notice that this line right here called the AMA line, that is determining trend. And the trend was up this entire time. This line was green. It didn't turn red until right here, and just for about 4 bars. If that line is green, then the algo will only take longs. It will only trade in the direction of the measured trend. So it's taking a long here, got stopped out. Took a long here, managed to make a little profit. Took a long here, got stopped out. This one, see that little circle right there? That was a long signal, but it's called a limit buy. And on limit buys, if you see one of those little circles right there, that means on the next day, wait for a pullback if you're going long of 190 ticks. Well, in this item, that is 190 Dow points. So you wait for a pullback of 190 Dow points, and you get long there. And then you put your stop, but the stop size on longs is $1,600, which is 320 points. So 320 Dow points is the fixed stop size on long positions. On short positions, it's smaller. It's 210 points. And on short positions, if there is one of these red circles, that means that this signal candle was unusually long, and therefore it's likely to be at least partially retraced before the trend continues on. So it looks for a pullback. If the signal candle was unusually long, and there's some embedded ways in the algo where it determines whether the signal candle was unusually long or not. And so different rules apply when you're going long or short when there's one of those little circles. And so there was a particularly difficult period from November through about February. And now here recently, ever since really about February 1, there's been 3 pretty good size winners. Yeah, there might have been a little stop out here and there. So let's see how that all looks on a chart. So here's over the last 3 years, this item has produced 36 winners and 30 losers. And you might say, wow, that's not a very good winning percentage. But here's the deal. We're trading on daily charts. And what this algo is designed to do is, if we get a trend, if we have enough momentum that it might be the beginning of a trend, we want to assume that that trend is going to go ahead and continue. But the fact is, we know that those trends only continue approximately half the time. The rest of the time, they don't have legs. Okay, and we know that, and that's why we use a fixed stop, and the size of the stop is back tested. But on for instance, this long position, notice how huge that one is. The reason it was able to get such a huge winner is it doesn't have a fixed target of X amount of money. It waits until the Walter Bressert indicator and its moving average cross over. And so sometimes you get enormous moves that the momentum is very strong. And if it's, and this algo is designed to go ahead and rake in all of that profit during these big home runs and grand slams. And that's what makes it profitable over a period of time, even though the winning percentage is just a little bit over 50%. And it shows right here, the average win is $4,325. That's one YM contract at a time. The average loss, $1,172. Then a 3-to-1 risk to reward. And so those who have been taking these signals religiously, no matter what, and frankly, no matter what my call is on Elliott Wave or Fibonacci targets, those people, those traders that have been taking these momentum signals religiously, knowing that yes, they're going to get stopped out on about half of them, have trading one contract at a time, based on back testing. Once again, these are theoretical results, but these signals don't change much from one quarter to the next, the way the algo responded, because it always, the settings are always pretty darn similar from one quarter to next. $120,000 of profit in 3 years. And that was starting with a $15,000 account. So what we do every quarter is we build a spreadsheet. And I'm going to open that. So this is a spreadsheet that we're going to make available to all of you. We're going to post it at the site, and you can download it onto your hard drive. And it's an actual Excel spreadsheet that you can run on your own computer, and you can play around with all of this, but I can show you what you can do with it pretty quickly. And if you were going to sort by return on investment, largest to smallest, that means that the ones that put up the larger percentages, this is a 3-year return on investment gain. It's figuring that you started with this account size, which is the account size required in order to run the algo starting 3 years ago. And if you just let it run and took all the signals, then it would have put up these kind of returns. Well, the Dow Jones did very well. The Russell did well. The gold and the DAX and the silver and the S&P and the NASDAQ, I would say all of those did really well. The Australian dollar, the euro, these return on investment numbers are, quite frankly, enormous. Absolutely enormous. And the only items that really didn't do so hot were these items down in the lowest regions down here. Now, and this is one of the reasons I'm pointing out the Dow Jones Industrial Average so much to you. But anyway, you'll be able to download this for, like, if you wanted to only trade something that the maximum number of losses in a row during the 3-year back test was no more than 5, then you could, once again, you end up with a list that includes a lot of the better return on investment items like the Dow, gold, S&P. Maximum dollar drawdown. Let me get this back here. You know, if you really don't like the idea of using large stops, you could sort by the stop size and get it, you know, trade something where you could use a smaller stop. If you prefer to use a trailing stop, only 4 of these 20 items, approximately 20 items, actually trade better when you use a trailing stop. But if that's just you just can't stand sitting on a huge profit without trailing that stop, if you want one that does pretty well, like the Australian dollar, it looks like it uses starts with a $1,200 initial fixed stop, and then at some point the indicators will we will tell you in the nightly report to switch to a $500 trailing stop. Maximum drawdown during the 3-year period, that's the most that you've stepped back from a high point on your equity, et cetera, et cetera. So that's going to be made available to you for you to use. But I do want to show you on this back test that I did. Let me make sure that I have it here. Here we go. There's the back test. Here's a chart of the equity curve over the last 3 years, trading Dow Jones Industrial Average. I can tell you, I've been doing this for 3 years now, and for some reason, the Dow is one of the easiest items to trade, and the equity curve generally has the smoothest look to it. So this started with I think a $15,000 account. So this basically, this red line is showing you the profit that is added to that starting account of approximately $15,000. So 1 year in, it was up to $25,000. It was up to $50,000 2 years in. It was up to about $125,000 3 years in. I think that's extraordinary. That's one of the better equity curves you'll ever see on a daily trading algo. And even with a winning percentage of only 54.5%, because those big winners come in often enough, it keeps that line moving to the upside. So that's the Dow. I'll show you real quick on the S&P one. We also got an exit signal tonight, but on the S&P, there's something available for it called the Daily Sentiment Index, and that's a costly item for just an individual trader to subscribe to. But I've integrated it into the algo and back tested it. And back testing basically says if you have a DSI reading and the daily sentiment index reading that is above 87, do not take a new long position. And if the DSI is below 6, do not take a new short position. And the reason for that is Daily Sentiment Index stands for basically the percentage of retail traders that are currently bullish. So the high point on this right here was 90, and here was 90, and here a couple of days ago was an 89. So anytime it's above 87, and that's back tested and optimized, you'll get a little red box around the candles. And so this most recent rise that we've seen, this winning trade from April 1 through April 14, was during a period where the daily sentiment index was very, very rich. It was the bullishness is very, very high at this time. amongst retail traders. And retail traders historically at major tops have been all on one side of the boat. They've been hugely, almost universally bullish. And so this is something I back test for. You know, if you go back to that March low of 2020, you can see you were getting some really low DSI readings back through there. Like here was a 5, there's a 5, there's a 4, a 5, an 8, and a 5. So all during those periods, remember the back testing is saying if the DSI is below 6, do not short the market. And had it attempted to short the market, I'm quite certain it would have gotten stopped out, because the volatility, these candles are so incredibly long. A whole bunch of them in a row moving down into that March low. Like that candle right there is an $11,000 candle from top to bottom. So almost impossible to trade in that environment with a stop. And so it was warning going into that low, just stop trading. Don't even try this. And you'll notice that there's an additional indicator on the charts, and this is called the money flow index versus RSI. So the black line here is our regular RSI. The blue line is the money flow index, which is essentially a standard RSI that also considers volume. And when you get these really dark green stripes, that means that the money flow index is, both the money flow index and the RSI are deeply oversold. And we've started, whenever you have a series of those in a row, we've started manually putting a line on the charts that is green if it is bullish, or pink if it is bearish. And once those progressions of deeply oversold are finished, and they stop appearing, and you see some climb out of those indicators, that often will mark a significant bottoms in that top, in that case. But it also marked a significant top here. And there was about a month of sideways to downward movement there. It's about the biggest sideways and downward movement we've had since March. And that was back in, I think, June of 2020. Actually, there was some more downward movement here. Notice the end of this period with that indicator, pink stripe there, definitely was followed by some downward movement. Those indicators got deeply oversold into late November. See where that green stripe came in? Beautiful. This one was a little deceptive. We just really didn't see very much downward movement right there. And this one also, I would say, would have been slightly deceptive. It thought that the downward movement was done, but it had one more little plunge going into like March 4th. But this is very interesting, that particular indicator, especially when you look at it back on the Dow Jones Industrial Average, because you'll notice that we had a big red overbought situation on the RSI, and the volume was really kind of low. It wasn't supporting the move up. Notice right here, the blue line, the volume goosed RSI was still pretty bullish, and price has managed to continue to move higher. But lately, the blue line has been underneath the RSI. So we're starting to see, just in the last couple of days, a little bit of weakness here. It's not definitive yet, but it's enough where on the Walter Bressert indicator, which is a triple smooth RSI, it has crossed over its 10-period moving average. And by the way, that 10-period moving average isn't always a 10-period moving average. Sometimes that's backtested. That's a parameter that's backtested. But the fact that we got one of these blocks here right now means It doesn't mean short the market, because this green line is still green. The trend is still up. But if we get enough downward movement here where this green line turns red, then we would be on a sell signal as long as the last crossover we saw on the Walter Bresser was also red. So I guess that's the main stuff I wanted to cover with you guys tonight, is that this continues to work as long as a person just sticks with the plan and understands that, yes, you're going to get stopped out. Now, if, for instance, this uses a stop size of $1,600. Now, if you look at that and go, there's no way I'm going to risk $1,600 on automated signals. I'm just not going to do it. Then you can step back and you can start trading these signals using the MYM contract, which each MYM micro E-mini contract is 1/10 the size of a regular YM contract. It doesn't mean you just need to trade one of those. You might trade 2, 3, 4, 5 of them, depending on your account size. So if this algo needed $15,000 in order to stay alive and put up all these profits, theoretically, over the last 3 years, if you started with an account of $1,500, you could trade these signals starting with one MYM contract at a time. One additional thing I will mention, and that is that when you start with a $15,000 account and in 1 year it's a $25,000 account, do you think you're going to be still trading one YM contract at a time? Probably not. You probably maybe trade 2 at a time there, and you might build to 4 contracts at a time and 8 contracts at a time as the account size grows. And then if there was a drawdown period and it made sense to start trading less, move back to less contracts at a time, that would be fine. But the fact is, this back test is based on trading 1 contract at a time. There's nothing, some back tests that are shown around on the internet assume that, once you get going, once your equity curve gets going, it assumes that you're going to trade more contracts. And of course you probably would, but I didn't want to include that here. But imagine if it had been, it's hard to say how big that would be, but it'd be substantially larger. It'd be trading more than just one contract at a time. By now it'd be trading probably 8. So that is, what time is it here? 7:39. I'm getting done with all my material pretty quick. And does anybody have any questions or want me to show, one of these other auto trading items? I know one thing I didn't show that I'd like to show. And if anybody has any questions, just throw it in the chat, please. But let me get back to my site and the current report that just came out last night to give you an example. So this already came out tonight. So nightly reports, premium plan nightly algo reports, and let's look at this spreadsheet. It's a summary. It's a summary of the report. So every night there's a PDF summary, and it's a multi-page PDF. I'm going to blow it up just a little bit here. Green means there's a new buy signal. Pink or red means there's a new sell signal. Yellow means there's trade management stuff that you need to do, and it'll tell you what's happening. So you'll notice that tonight I'd already showed you on the Dow, we've been on a buy signal since 329. It's saying exit the trade now. exit the trade now, and it's in profit, and go flat. And so anytime you have see yellow, it's an action item for that night. The S&P, same thing, exit the trade. On the SSO, the 2 times bullish ETF on the S&P, tonight it said exit the trade, take profit. All of those were in profit. The last time, and this is kind of funny, but if we go to the SDS, this is the bearish, or the 2 times bearish ETF. The last time this Algo recommended going short the market with this ETF was way back on October 28th. It was October 28th. That's how long it's been. Let's see, November, December. It's been 6 months. It's been almost 6 months. And it got stopped out the very next day. And the reason it hasn't attempted to short the market since then is it's got this red line here. As long as that's dark red, the trend is down. The trend is down. It would need to turn green in order for the trend to change. So if you have been trading strictly on Elliott Wave and looking at Elliott Wave counts from any number of Elliott Wavers, some are more bullish, some are more bearish. The most famous is pretty much constantly bearish, it seems like, but and you believe what they're saying, but you want confirmation of a trend change. This Algo would be perfect. It would be perfect for that. And that way, yeah, you might have attempted to short the market for a day, for 1 day, but if your primary interest is in shorting the market, if you've been a premium plan subscriber and paid attention to what the charts are saying, you wouldn't have ever attempted to short it ever since Halloween. Kind of amazing. And so this can add a tremendous amount of value, even if you're an Elliott Wave person, or let's say you're a cycles person, you're a Hearst cycles person. I know Hearst cycle people are taking a real hard look at the markets right now, because when you do a sentient trader analysis on Hearst cycle analysis, that composite line, it's bearish from April 18 all the way to August 25. From April 18, which is essentially pretty much, well, it's 4 days from now, still 4 days from now on the Dow, all the way down to August 25, it's bearish. And but the problem is, it's been suggesting that we might be at or near a top for several weeks. And so this service that I'm providing, the premium plan service, I think would make just for an excellent, you could look at it every night, and if you own a lot of stock and you think that we're nearing a major market top or something, you could look at these signals and decide when might be, this is because these are momentum signals. As long as the momentum's up, it's going to give the benefit of the doubt to the long side. Even if you aren't deadly bearish, like some Elliotticians are, expecting the stock market is very close to as high as it'll ever go in our lifetimes. There's some that are talking that way. Even if you think that, and I personally don't, not on my Elliott Wave counts, I do expect to pull back through mid-year and then more new all-time highs after that, possibly big new all-time highs based on the Elliott Wave. But I am expecting a pullback. I am expecting a pullback. For instance, on the Dow, possibly a good sized pullback to mid-year before moving on to new all-time highs, and we could have for a very choppy, roadmap over the next few years. Even though we're expecting new highs, there could be some significant dips. And, we kind of forget the market's been going up here really strongly. We kind of forget. We just sat through, one to 3 pretty significant dips. As a matter of fact, this one here was a 38% kind of a flash crash, if you will. It only took about 5 weeks. So even though it seems like the market is impervious to ever moving down again, that's what everyone was thinking here. And that's what everyone was thinking here. And I just think that these algos really do give a special perspective that there is no opinion. There's no opinion here. It's based on backtesting, and there's no opinion based on Elliott Wave or targets or anything else. But it is saying best take profit right at the moment, but even though the trend is still up. The reason is because the Walter Bresser got real toppy, and we got a little crossover right there. Any questions? Anybody got any questions that I can answer for them before we shut this one down? As always, if you have any questions, please send me an email. My email is sid@elliottwaveplus.com. That's with 2 L's and 2 T's. As always, I hope that my work is beneficial to all my subscribers. And we certainly are in some extremely interesting times, but I think it is refreshing to once in a while, instead of getting someone's opinion about the market, get something that is completely logically built. So there's just quite simply no opinion to it. It's based on backtesting and optimization. That is everything for tonight. Thank you so much for joining me. The recording of this will be posted either tonight or tomorrow sometime. And at the same time as we post that, we'll put up that sortable spreadsheet for you. Have a great rest of your evening. Talk soon. Bye-bye.